Hello, everyone. Welcome back to another chart chat. Yeah, we're sticking with the term. I don't have a better word. I can't come up with anything. So deal with it. It's not great. I don't love it. I know you don't either, but that's okay. Um, I'll tell you, today is Thursday, April 2nd. I'm actually recording this mid morning. I'm glad that I waited. There's some kind of interesting news that we're watching sort of develop here. But as we get into the charts, you'll see why it matters. Being my age, and I just kind of want to lead off with this because I think it's kind of the mindset that I have right now. Um, there's a handful of movies that really kind of defined my, let's say, adolescence and young adulthood. Of course, like the 300 movie was one for young men. We all kind of got a kick out of that. And then, of course, there was also like Gladiator. And right now, 2026 is, there's become a meme of this, and I'll pop it on the screen here, but it's Maximus Decimus Meridius, the main character in Gladiator, is in the arena, and he has his hands up, or maybe his swords in his hand, and he screams out to the emperor, are you not entertained? That's sort of the way I feel right now. Are you not entertained? Is this not entertaining to you? Um, that's kind of what we're dealing with. This is talk about a roller coaster. I hate to say it, but I told you so, and I don't mean that in like a vengeful way. It's we knew that this year was going to be a chaotic and very volatile year. Um, and it is, and it's going to continue to be. So when I try to set expectations and say it's going to be volatile, go ahead and own that as like a state of affairs. It's so that when the volatility comes, it doesn't smack you in the side of the head. You're at least expecting it, right? It's like if you know somebody's about to punch you in the gut, you can at least kind of tense up a little bit and protect your organs to the degree that you're able. Versus you're just kind of sitting there and lollygagging. Someone slugs you in the gut. That's going to hurt way worse. It's probably going to put you down for the count. Um, so that's why I kind of wanted to frame the year. Expect the volatility. Now, let's go a step further. Okay, this is not intended to be, again, panic seeking or panic inducing, anything like that. What I will say though is it does not surprise me one bit that Trump had his little speech last night on Wednesday, April 1st. Whether the April Fool's Day plays into that, do what you will with that. But I bring that up because some notable things that were said last night, and I don't ever watch any politician speak live because I have no interest in them. And if we all gave them less interest, all of our lives would probably improve greatly. However, in the aftermath, kind of doing the postmortem on his little talk, 2 to 3 weeks keeps popping out. And there's one other statement that keeps popping out. I'll talk about that in just a second. But the 2 to 3 weeks thing really matters. And here's why. Because most Americans, unfortunately, have become horrifically disconnected from our own Constitution, it's not really known that war powers in our country technically have to be authorized by Congress, but there's a 60-day window that a president can partake in some shenanigans without congressional approval. Now, there's also a 90-day window. I won't get into all the weeds on that, but the point being is if we're looking at this basically as a March 1st start date, it's actually, I think it was March 3rd. Think about where your 60-day window is going to kind of tap out. That pretty much puts us 2 to 3 weeks from today. So the idea that there is a set line in the sand for Trump 2 to 3 weeks from now, it's probably for that reason. They don't necessarily think they're going to get the congressional votes to continue this nonsense, and they don't deserve it. I'll try to keep my opinions out of it, but it's absolutely ludicrous that we're doing this in the first place. We are doing it. Why we're doing it, I'm sure everybody and their mother knows why. The reality is nobody actually knows exactly why. It's a confluence of factors, but I bring that to mind because as we're looking at this, you take the war powers consideration into mind, and then let's take one other piece of the puzzle into mind. We know how important oil is to everything. to the transportation of everything, to the production of everything, to the movement of the goods. Again, going back to the transportation, to the lubricating of the gears in you know any manufacturing process. Anything that's real requires oil primarily, but energy at a minimum. And then to take that a step further, energy then translates into the tech space. So let's say the digital versus the real. You're going to start hearing a term come out, and I'm just going to go ahead and mention this now because this kind of aligns directly with what I was saying back in that 2026 Outlook video that I did, and that is this new term is Halo. Hard asset, low obsolescence. Get ready, you're going to get smacked with that one all year long. But that is really what we're looking at is there is going to be a push towards hard assets. I've already talked about that. We've been discussing that. That's not new. Low obsolescence, meaning there's no way that these are going to be obsolete. So there are hard assets that do become obsolete. There's famously, again, just because I'm a history geek, the original television, and I'm blanking on what the element was or the chemical, but for red to show up on the original color television, there was a mineral that was needed. And it was, proposed that this was going to run out. So of course, TV manufacturers figured out a different way, and that's where the original tube TVs came out. But I bring that up because again, that mineral, you know, wasn't needed anymore. That's an obsolescence, right? But then there's others that are needed and are likely to be needed into perpetuity. But as we look at the real economy, the crux of what I'm getting to here is when it comes to the oil markets, it's not the price of oil that matters as much as the rate of change in the price of oil, especially to the upside, and then how it stabilizes or whether it stabilizes. Trump's tariffs went into effect a year ago. Most companies doing large scale business, the ones that are most impacted by tariffs, they had inventories already stocked up probably for a year or so out. Now is where we're getting to the grinding halt, where the inventories aren't available, and most of them haven't re-inventoried because they were hoping that they'd get, let's say, like a ruling out of the Supreme Court that the tariffs were non-constitutional or couldn't stand. What they may not have counted on was the fact that the Trump administration would press forward with some of these alternative tariff measures. But I bring that up because we don't have that excess supply in the system now. Those inventories have been depleted. So now the shipping problem gets worse by orders of magnitude as we go forward. So we have to see resolution sometime in the next month in the Iran Strait of Hormuz conflict region. There needs to be resolution very soon. And if there's not, the knock-on effects are going to domino very quickly. Right now, the market is kind of saying we're okay. We think we're going to be done with this. The other thing, in addition to Halo, the other one that you've probably already heard, or maybe you haven't, but taco. Trump always chickens out. Okay. The taco concept, Trump is an egomaniac. Whether you love him or hate him, I don't care. The guy is an egomaniac. And for that reason, when he is not favored, he tends to back down. The question is whose favor does he care more for? The American people or other countries? Or one other country? That's the question. We'll see. Point is, American people are going to have a hard time if we don't get oil prices to at least stabilize over the course of the next 2 to 3 weeks. We'll see what happens. In the meantime, what is the market telling us? Let's get into the charts. All right, let's break into it real quick. I'm gonna buzz through these so that you can get the important information, and I'm gonna try to not get hung up on all the details. S&P, here we are. Okay, this is daily, but it's really only going back to the start of the correction period that we're kind of in the midst of. Here's where the war, basically what it technically started on. What was that? The first market day of the war, but we had, kind of hit our peak already. I have harped on this level right here. This 65.75 to 65.80 level is the key level of interest. It was a support, but it is now turning into a level of resistance. We can see that. We came down to it here, which we closed these, here, let's put this into some bars so you can just kind of see open, close, right? Opens on the left, closes on the right. Here we opened, closed up, okay? All right, here we open. Whoop, we broke down. We had a bad day. That's okay though. The next day, look, well, we snuck right above it. We got there. We got above it. Okay. But it didn't hold. Okay. Oh, we tried it again. But then it didn't hold. And then it didn't hold. And then it didn't hold. And that was a pretty aggressive selling stampede. So, of course, what did we do next? Huge buying stampede. And that's just reactionary. The nature of our current everyday markets in a let's call it a post BlackBerry world. Let's not give all the credit to the iPhone. Let's say it's a post BlackBerry world, a post digital communications in our modern era where markets move so much faster because information moves so much faster. We get really fast, aggressive, short term moves in the market. But once you zoom out and you start looking at it more in terms of trend, you realize that those super fast moves don't really mean a thing because look, we're right back to where we started. But the important thing is where did we start? We started right under our key level of interest here. And where are we? Right under our key level of interest. And to go back to our daily bars here, look, we came up, we closed just below it. Now this was on two knockoff, hard knocking, good, solid, robust days. Here we are today, actually proving to be a decent day despite Trump's rhetoric last night in his famous little speech that he made because he knows his clock is ticking. This positive news is probably because Iran and Oman are in negotiations to try to expedite transmission of oil and tankers. So markets as a whole are kind of happy. We'll see. We'll see. A lot to be seen there. But that's the S&P story. I need to get us, we got to get this S&P's got to rally its little butt back above 65.75 before I'm going to get too excited about much of anything. Okay. I'm not bearish. I'm not bullish. I am neutral right now. This is my favorite line. Don't just do something, sit there. Right. You often hear it the other way around. Don't just sit there, do something. No, there are times when the market, don't just do something, sit there. You don't have clear signals yet. We're getting clearer signals, but we don't have clear signals yet. So as it relates to our portfolios, yes, over this past couple days, you've seen a couple of little tweaks. We're just peeling off exposure in areas that have an excess amount of risk for the theoretical potential return that those investments present to us as we look down the horizon. Okay. We're not getting out of the market yet. Okay. We're not flying to, no flight to safety yet. I want to see the S&P get its little butt back above this level though. I really do. That's what we need to see. Now, in contrast to that, the dollar. Okay, this has been another one I've harped on every one of these little chart chat videos that I've done. The dollar matters. Okay, we thought we were starting a new downtrend, but nope. Instead, we're having a retest here. Okay, the dollar's back up to and then failed to break out again. Okay, it got above this level, but it was only there for a day. That's fine. We're going to let it hang. Do your thing. Okay, but we're back down. However, we're not starting a new downtrend yet. I need to see some lower highs. So the fact that we're here, good. Okay, fine. Then I want to see us decline some more. I want to see the dollar falling off. Do I think it will? Look, I'm not a betting man. As of right now, I think it will. Think. Take that for what you will, but I think. Okay. Part of the reason I think that is some factors going on with regards to inflation. I'll hit on that in just a second. But I also think that this is part of what we're going to see as conflict in the Middle East is probably going to continue, but it's going to continue under the guise or under the cloaked in other clothing. We've seen, just to bring up one, for example, Ukraine. Okay, the Ukraine-Russia thing. Okay, if you don't see that being connected to the Iran situation, you're not paying enough attention. Or maybe that's good. Don't pay attention because honestly, you're better off if you don't. But if you're looking at all these things and you're not recognizing that there's a direct correlation between those two events, even though they are under two very different presidents who are supposed to be arch enemies of one another, they are probably far more correlated and aligned than you initially thought. Just a little note. With that being said, though, I think the dollar falls off here. Now, because I mentioned inflation a second ago, let's go ahead and hit the inflation question real quick because I do think it matters. This is our inflation indicator, okay? Now, you'll see, and again, these charts get kind of messy, but critical convergence 1, okay, confirmed, okay? Here's where we started a new downtrend. Critical convergence 2, hey, look, this is where we started a new uptrend. Okay, these were pre-marked convergence on a number of different indicators that I use, but what this chart is it's basically saying, do investors think inflation's going to be worse or do they think it's going to be less worse? Sorry, that's bad English. This isn't actual inflation rates. This is how the market is perceiving inflation. And the hard reality is it perceives inflation is going to be worse. Okay. Now, we also have critical convergence 3 over here. This is in December of 26. Okay. So, what happens between now and the end of the year is going to be very telling as to what we should project going forward. But I will tell you, because of what we're watching right now, yes, this large trend line up here is probably our upside resistance to this. Okay. So if we were to look back at what happened in 25, and then if I really zoom it back here we are back in 22. Okay. That was the peak of inflation as it relates to the COVID abysmal policy making that created the inflation with money printing. Money creation creates inflation. Okay. This is that ultimate peak here. And then, of course, we had the spike back up where we got Fed rate cuts, and then they're not going to cut anymore. Do they need to raise rates? What's the deal? What's going on here? Okay. Between here and here, I will tell you, and maybe that's not coming through very clearly. Let's see, let's do this. In this range, this is where the election happens. Don't be surprised when your politicians do what they do best. And of course, your Federal Reserve, your dear, dear Federal Reserve, who is supposed to be independent and not politically swayed. If you cannot tell that I am very sarcastic because I hate the Federal Reserve with every bone in my body. And I have good reason for it. And if you ever want to talk about it, get me started. Rev this motor up. I'll go for hours on end. You probably don't want to do that. Point being, though, is yeah, the Fed's this independent body, and it's not a cartel, a banking cartel, and it's not, the monster from Jekyll Island. Sure, fine, okay, that's okay. The reality is, though, they're very politically swayed, and the reality also is Jerome Powell is theoretically out. We'll see if it actually happens. Kevin Warsh is theoretically in. It should be noted that Kevin Warsh has very close ties to, in fact, he is married to the daughter of the Lauder family. And I only say this because it matters as it relates to all of the policy decisions that are likely to be made, which will affect portfolios, investments, markets at large. He is directly tied into a very prominent player in the current geopolitical events. I'll leave it at that. But is that forgive the pun, a trump card? It might be. The fact that we've got critical convergence that's going to basically is going to occur sometime between now and December. It would not surprise me if we see rate cuts come to the table after things get ugly. They're not ugly yet. I know it feels ugly. Things are not ugly yet. But if oil prices do not come down between now and the next couple of weeks, inventory, re-inventory, all of those issues, the goods constriction will create a demand constraint, and there will then be money circulation that will probably expand, that will create inflation. And then what will they do is instead of being able to raise rates to battle inflation as they supposedly want to do, they're going to try and cut rates because they want to stimulate the economy because we'll actually be stagflationary. And then they're going into an election and they want to try to secure the election. So they want to give the market a little bit of a short-term boost, because the harsh truth of us as people now, our memories are like this short. People don't even remember the Venezuela situation. That happened a month and a half ago. Okay. Our memories are like, because there's so much information. So this matters as we look forward at what we're doing, what we're projecting, what our trajectory is that inflation is going to be, it's going to rear its ugly, ugly head this year. And we are prepared accordingly. And it's probably not just in the US. We'll probably see the global inflation, which, go back to that initial video I did, my outlook on 2026, where we're also looking at international inflation protection, not just domestic. So less on that, more on oil. Let's talk oil for a quick minute here. Oil in its raw price, right? This is just the dollar pricing of oil. Wow, look how high oil is. Right? That's everybody wants to talk about how high the price of oil is. Now, how high is it really? Well, let's zoom out. Okay. 2008 prices, we're peaking up here 150 a barrel, give or take. Okay. Have we lived up here before? Yeah, okay, here's 2011, right? This is when the fracking industry emerged in the US and when we started our path towards energy independence. Energy independence is not the same as oil independence, and that's an important distinction to make right now, because yeah, we have tons of natural gas. Oil, we have it, but we don't have it in the same abundance. So, energy independent, perhaps. Oil independent, no. But oil has been up here. It was back up here in 22. Okay. So, well, it's not that high, right? Oh, yeah. I mean, it's a high price. Don't get me wrong. But the reality is, it's the rate of change that is so powerful to markets, because everyone's trying to figure out the next step forward. And because shipping is based on futures contracts, right? They're locking in their future on their petroleum or on their you know ocean diesels and oils. Marine oil is what a lot of these ships. Some of them are running on natural gas, but heavy marine oil is typically what they're running on. They're trying to lock in their futures contracts. Of course, the people shipping products are trying to lock in shipping futures. Everybody's trying to lock in, but they don't know where the prices are because nobody knows what's going to go on. If we don't get oil stabilizing and suppressing in its price soon, even if it stays at 110 a barrel, it just stays there. It's the rate of change that matters. So if we don't get a rate of change down, or a rate of change of zero rate of change, right, just flat pricing as we move forward, that's going to create a massive, massive problem in the broader economy that will drive prices up. It will suppress economic activity, and it's going to lead to a really rocky start of the summer. Just a fact. Okay. We are probably on track for a rocky May, June, July. If I had a, somebody's going to hit me with a bat if I don't give you an answer. Okay. Yeah. Sell in May and go away will probably be valid this year. But until the evidence proves it, we're not doing that. Here's where oil, to me, is most interesting. Okay. You know that I like to price my oil in gold, because the dollar screws up the petrodollar or the petro yuan, which is now a very, very real thing that everyone wants to try to brush away. But the petrodollar was the equivalent extension of the Bretton Woods contract that gave the US the critical economic dominance around the globe that it used to become what we are today. It is basically losing that petrodollar status at a very precipitous rate. And because of that, it's going to change the global dynamics on how we price not only oil, but as we also price the dollar. But as we look forward, I would just want to say, okay, give me something that doesn't change in its value. It's the same, because there's only so much of it. It's a finite quantity, and it doesn't change in its properties. That's gold. Okay. This is the thing that battles fiat currency. Okay. Fiat meaning an unbacked currency. Here's the trick with oil when you price it in gold. All right. Today's interesting. We'll see how the day ends. Okay. But This yellow box, to me, is the critical box that matters. I knew oil was probably going to get into here, although it did. It fought, right? So if I'm looking at my bars, excuse me, as I'm changing things around. Look, we opened here right below it, and we fell down. We got up to it, and we fell down, but then we broke into it. But we came back down, right? So if I chart it and you can see this level has hung in there. But we got into this box. I want to see us stay in here. Okay. The fact that we're escaping today isn't a good sign. Although earlier today it was actually down, it was holding. If I were to give you, let's do an hourly chart here. Okay. So here's today's start. We came up and we held in there around about, what was that? Oh, that was Thursday. Yeah, that's today. Okay, Thursday. So these are the futures. That's 4. And where are we now? We're at 11. Okay, so 4 a.m. We were kind of ticking along here. I've been up very early today, so that's probably why I'm saying this. But just looking at the daily, I like to think it's going to come back down and close in here. If we get a big escape from here, I'm not going to be real happy. Okay, this level needs to hold. And that's only because once we escape here, we've got some, not to say we've hit escape velocity, but there's some runway for oil to run even further. And the longer it does that, again, without stability, the more pain that the market is going to end up having to feel before it can normalize. Okay, so take that for what it is. Let's give you a bright spot real quick. Russell 2000. All right, over the past couple days, okay, or 2 weeks rather, since the last one of these videos, I've talked about these levels, how important these levels are. Look at this. How beautiful is that? Came down, kissed it, it's closed right above it, and since then, the small cap companies are holding in there. The idea, if you don't remember, these purple bands present ranges at the Russell 2000, tends to stay in over time until it reaches a new cycle. Okay. The fact that we're up in here and we're staying up in here is a good sign. So small caps are hanging in there. I want to see them continue to hang in there. If they break down below this level, that's going to just, again, stacking the weight of the evidence of what's to come, that's going to be bearish. As of right now, though, don't just do something, sit there. That's the takeaway. That is where we are. I want to see oil chill out a little bit. Maybe it'll happen by the end of the day. Trump certainly isn't helping the cause. I want to see, excuse me. Well, I told you I've been up since very early this morning. I want to see the dollar stay in below this $100.33 level. I want to see the S&P 500 get above this key level of interest at 65.75 to 65.80. Let's get up there and let's stay above it a couple of days. International. International is kind of telling us a lot of different stories, and that part of that's because international is not just like what US and the rest of the world. Very different things going on. Brazil is telling us a very interesting story because let's see if this, yeah. So here's a basket of Brazilian stocks. I mean, my goodness, look at that. Brazil has a lot of natural resources. It's a huge country, a lot of natural resources, oil, in addition to metals, critical earth, or rare earth minerals. And generally speaking, for the most part, they're apolitical when it comes to the Middle East. So Brazil tells one story, whereas, let's just grab let's see here, some basket of Chinese stocks. Look at Chinese stocks, right? Chinese stocks are getting hit pretty hard because they stand to lose the most the longer oil gets held up. Now, is this Trump's grand 5D chess game? I've hinted that there are definitely incentives to this Iran conflict to destabilize China's trajectory. Is this the sole intent? I don't know. But it is definitely affecting China right now. We will see what happens. The last thing I do want to highlight, I'm just going to end on this note. Look at the Dow Jones transports. what an interesting phenomenon we're watching here with the transports or the trannies. The transports are remaining remarkably resilient right now. However, this gap right here interests me. We're about to close it. We actually technically closed it on an intraday basis today. The transports fall off here. That's not going to be a good sign. The fact that they've remained so resilient is an indicator that the market believes that this conflict in Iran is going to calm. Oil prices actually are going to calm, and the transportation industry stands to benefit the greatest because they're locking in transportation pricing today at exponentially higher prices. That is going to play into profits because their future costs are going to decline if the oil prices stabilize or go down. So, this is what the market's telling you. Does the market know what's going to happen? No. Does the market think it knows? Yes, the market thinks it knows. We will know for sure soon enough. Don't just do something. Sit there. Calm down. Take a deep breath. I know it stinks. It's not fun. Look, I'm the one that does this every day. And I know this is like a roller coaster. Are you not entertained? Look, it's theater. Try to look at it like a movie. It's just theater. There's a good guy, there's a bad guy. Pick who you want to be each player. Of course, let there be like the hero's journey, right? Let there be a guide. Um, and then there's this great trial and tribulation, and then the self reflection and the moment of inflection, and then the great rise of the phoenix. You know, it will come. The rise of the phoenix will come. It is just going to be one hell of a story to watch play out between now and then. So hang in there. Don't get too depressed. If you want to talk, let's talk. You want to chat about the portfolio? You want to chat about what I'm seeing? You want to get into the nitty gritty details? Because I'm only brushing the surface right now. Give me a call. Let's set some time on the calendar. And in the meantime, I hope you have a wonderful Easter weekend, a blessed holiday to those who celebrate. And I hope that, speaking of phoenixes, there's something to be said for rebirth. The spring is a wonderful time to rebirth and to start over and start anew. And I'd like to think that we're going to have some starting anew, some spring shoots coming up here soon. So with that, I wish you all my best and I will talk to you soon. All right. Bye-bye.